3 weeks ago, I went blind, so I have multiple pairs of reading glasses. If any of the rest of you are of the age, you may borrow them. Who's ready to have some fun? Who had fun last night? Who's missing this morning? I'd like their names up here so I can call them out later. I'm not going to let them get away with it. So, who is here at SampleCon for the very first time? Wow, cool. Welcome. Since there's so many new people, I'm going to give you a little history of SampleCon. It'll take like 3 minutes. So you know how we got here and kind of what our mission is for today. So this is the 7th SampleCon in the 6th year. So does anybody know how it could be the 7th SampleCon in the 6th year? Let's see who's on their toes here. Anyone? What? No leap year? Come on, you guys are researchers. You look like you know. 2 in 1 year. Give this girl a prize. I'm going to give you a prize. Here you go. Welcome to Texas. I expect you to wear this throughout the event. Congratulations. I like to give away prizes. I'm going to be up here for the next day and a half. I'm a fairly high maintenance individual. So here are some of my favorite supplies. We have Immune, if you would like some immune booster. Some Himalayan sea salt. This is very good to put on your food. We have some chapstick, which I'd prefer you don't use. I don't want to share it. I have a blend of essential oils, Young Living, if you would like them. They are Bravery. I know some of you are nervous to speak. There's Lavender to relax some of you. And then we also have, that one's a Valor, Harmony. So if things get a little heated up here, I will douse you with some oil. Please do not touch me unless you have sanitizer on. This is some sleep spray. If I don't like what you're saying, I'm going to put it on you. Maybe you'll fall asleep. And then we've got some supplements, okay? So we've got magnesium, immune, probiotic, keep your system flowing, and some lozenges. I have a candle here if we'd like to get in the mood later. I was told earlier by the hotel I was not allowed to light them, but they did give me matches. A little bit confusing. And we have up here a book. If you would like to sign it when you come up here, this is Plans for World Domination. Obviously, the world is going to be dominated by someone in this room, right? Sample is definitely a world dominator. Okay. So, with that said, 7 SampleCon, 6 year, 1 prize given. We've got some other prizes. Some of them are cooler than others. So, tons of new faces. We hope to see you back next year. Glad that you joined us. So this whole thing started in 2013. Does anyone here know Patrick Comer? Anyone? Anyone here like Patrick Comer? Difference. I like Patrick Comer. Okay. So this event was started by Patrick. So if you love it, give him credit. If you don't like it, blame him. Some of the rest of us had something to do with it. And he started this as a user conference. For those of you who do not know, Patrick has this platform and does some stuff. And he invited people to come to an event to learn how to use his tool, right? And then in 2014, he had yet to raise, 60 million or whatever just happened. So he came to some of us and was like, hey, I need some money. Do you guys want to do this SampleCon thing with me? I'm assuming that I got invited to participate because he'd gone through the rest of the list. But he did call me. I'd really like to have you. It'll be fun. We need to give a check and get this thing going. And so he was able. There's slides, but I didn't look at them in advance. Here we go. Here it is. It's going with my story. This is perfect. So Patrick bamboozled us into joining him on this mission. He felt very passionately that Our industry did not do a good job focusing on sample. Typical conferences may have 1 or 2 sessions related to sample. They all kind of said the same thing, and there was no organization that was really committed and dedicated to next generation sample and moving things forward. And he's like, hey, I'm going to take this on, and will you guys do this with me? And we were like, sure, that sounds fun. And so we gave our money, and then we were like, we don't know how to like put on a conference. Like, I don't know how, do you know how to do that? Did you know how to do that? I don't know how to do that, right? Yeah, we have no idea what we were doing, right? So we're like, if you don't know what you're doing, just book the Ritz, right? Everything will be all right. So we have our conference at the Ritz with the founding members. Will the founding members please stand up? Bonnie, Patrick, Andy, Mende, and myself. Here they are, around the room. You can share the blame if you don't like it with them. And then it was like, hey, people were like, hey, is this like, what kind of event is this, and who is this, and how do we get more people? So we decided to add some committee members. It's not always a good idea, you guys. So we had some committee members, right? And so we were like, cool, we have some help, and now there's like 9 people. We can't all be bossy. Not everybody found me funny. I was like, you're out. And the next year, we then invited some additional board members, right? Because we're like, hey, like we're smart and cool and whatever, but maybe we're not that smart or that cool. Like maybe some other people should have some input here. So we then invited Seema and Jake, Seema Vasa and Jake Wolf, if you'd stand up. We invited them to join us. We needed their money, their ideas, I mean, and that brought us to, I don't know where, because I'm not following these note cards at all. Oh, I can't believe you guys put me up here. Okay, so last year, our theme was the great, oh no, what was our theme? The great sample debate. There was no debating. I was really pissed. So this year, stuff needs to go down up here, right? Because I know that you people are sitting in your office, right? And you read your little like research daily news and you're like, that's bullshit, right? Or so-and-so's blog and you're like, who do you think they are that they can say that, right? And there's all of these new things, right? Every day I'm getting these this is a new thing in research, right? Opinion pieces, right? Everybody's zinging out these opinion pieces and you guys are all sitting there and you're like, blah, 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 blah. So I want to hear that up here. No hard feelings. I mean, there might be, but that's too bad for them. I'll give them some oil, calm them down. So our goal here today is to have fun. We want to have an open and collaborative conversation, okay? We can't have an open, collaborative conversation if everybody agrees and then goes back in the corner and is like, that was stupid, right? It doesn't work like that. And then this year, we needed more money. So we added, where's my slides? We added 2 new, yeah, here we go. We added 2 new board members, right? Is that right? We added 2 new, right? So we added Nancy. Where's Nancy? Nancy, who I've already scared to death and told her she needs to, she's very nervous. There's Nancy. Nancy, did you say that you wanted to tell a joke? Yeah. Nancy likes to be planned, and I am the wrong person for that. But we're friends. We're friends. We're going to have fun today. And then Tom joined us. Tom, where are you? Aha. So Tom joined us. The founding members are company related. So now Tom is with us. So I hope they had fun. Now, big change for next year. Where's Rob? Oh, he's sitting right in front of me. And then last, but not, Rob, you get a prize. I'm sorry, Rob. Come here. Can I have a hug? How do I forget you?
I've easily forgotten.
I know. Oh. Welcome, Rob. Rob just recently wrote a blog post. Does anyone want to talk about it?
Probably.
Yeah, okay. Sit down.
Did we pay the bill?
I don't know. Did they pay the bill? Who paid the bill? I don't know. So 2019, I have no idea what's going to go on. They kicked me off the board, I swear to God. So this is my last year. I am rolling off this board because Patrick said, this is your date, you got to go. And so whatever happens here, I don't care. This is it. You guys have fun next year. I don't know what's going to happen. We'll see. Thanks, Patrick. It's been real. So if you don't like me, you don't have to ever see me again. No, I'll be back next year. They'll be like, oh, you have to sponsor. That would be weird if you didn't sponsor. Like, you've been in this whole thing, and you're going to give us money. We need your money still, but you can't be part of our group. Cool. Okay, so now I'm going to launch into like equal to like a pharmaceutical commercial, right? Where they're like, hey, this medicine is great. And then there's like all these other things. And so I'm going to tell you about all our sponsors, okay? Are you ready? Is everybody ready? Whoever I miss, sorry. Is this sponsors? No, this is, okay, before I get to sponsors, if you need to get onto the World Wide Web, there's some Wi-Fi. And if you want to know what's going on in this conference, because Rachel wanted to go paperless, which I hate because I need a lot of paper, I argued, I lost. See, they're kicking me off. They're like, no, who cares what she thinks? It's all on the app, so get it. And if you don't know how to do it, there's those cute little table tent tabs things that you like would have like a happy hour list on them on your table. So sponsors, I'm not going to say them all at the same time, because there's a lot, but I want to make sure that we recognize them because this is a nonprofit event. We do not make any money, hence why people keep having to ask us for money. And our sponsors are what makes it possible for you guys to have potatoes and sausage for breakfast. So last night, who had fun? Awesome. Rattle In, barbecue was fantastic. That was Tango card. Tango, can you please stand up? Oh, look, this is going in order. Nobody's here. They partied too hard. Oh, where? I can't see. I have no lights. Okay, hi. Thank you so much. We had fun. We got kicked out at the end. They were like, you have to leave. Everybody's kicking me out of everywhere. This is a theme. And then in order to get to the Rattle-In, who participated in the scavenger hunt? Did you guys have fun? I heard it was awesome. Okay. Who thinks that they had the most fun? Who's excited to get a prize? There's good prizes. Like, you guys are going to be stoked. I'm not going to tell you what they are, but let's thank EMI for that. Can you guys stand up? EMI. I can't. Oh, there we are. Thank you. This is very important. I hope you guys are all paying attention to who these people are because it's going to matter. I mean, they matter in general, but let's thank Lucid, my friends at Lucid, for the application and going paperless and saving trees. Lucid, would you stand up? Hello. And during the break, you have the opportunity to get a professional headshot. So I'm going to give you a little bit of advice. If you have a LinkedIn picture with like your kid cut out of it, or like your ex cut out of it, or you're drinking a beer, or like whatever, like just get it together, okay? Like, I'm all about having fun and being foolish as can be, but just get a normal fucking LinkedIn picture, okay? Virtual incentives, people. I hate having my picture taken. Okay, and then this is for later, I think, right? Am I done for right now? Or I'm supposed to keep going? Okay, I told you, it is like pharmaceutical commercial, right? Okay, and then we're gonna have a Shark Tank event. Has anyone seen the show Shark Tank? Nobody's seen it? You guys are anti-NBC. Is it on NBC? I don't even know. So we have some great ideas, or I don't know if they're great ideas, some ideas anyway. And people are going to present, and then we have some phenomenal judges who are going to tear them apart, challenge their ideas, and they're going to pick a winner, and the winner is going to get $500. So we were really nervous to move from where have we been? New Orleans, right, to Austin, because it's a whole different thing to like plan an event in a different city where you don't have anybody that has a home base. So we're just going to give away a lot of stuff. And then you'll like it and you'll come back. Tonight, what day is it? Thursday. Yes, tonight, who's going to play poker? Ooh, that's going to be a good crowd. Okay, so my friends at Prodege, stand up. Mendy, I can see you, like right there in front of me. Yes, okay. They are going to put on a phenomenal event. If you have not ever been, you should come. If you don't play poker, you should still come. If you would like any type of social media blackmail, you should come with your camera because it gets a little wild. Okay, and those are my morning sponsors, right? Am I done with that? Good. I'm done. If I missed you, I will make it up to you, and I'll give you a bandana. Okay, so, so my name is Jacqueline. Somewhat presumptuous of me not to introduce myself. You can just call me Jax. If you've known me for a while, you know I have a head injury. This is the true, absolute true story. Hey, Christian. Is Christian here? Did you get your badge? Good stuff, Christian. Christian said last night, what happened to you about my arm? And then he said, you probably deserved it. Right? Then when I was like, dude, I was in a car accident with my whole family, he's like, oh yeah, I feel like an asshole. I was like, told you you were going to feel like an asshole. But anyways, so I forget what I'm doing. I have no responsibility for what I say. I don't mean it. It's just the way it goes. So I apologize to whoever I made angry last night, and I preemptively apologize for anyone I offend from here on out. If you read my blog, you know I just don't care. Okay, highlights. Do I have a time, a countdown or something? I feel like I've been up here for like 2 hours. Okay, thank God. A couple of highlights, okay? The most important things for today. We have a break at 11 o'clock. Then we have lunch at noon. Then we have drinks at 4:30. And then we play poker at 8:30. Do not miss any of those events. There's like some other stuff that happens up here in between. That's when you check your email, go have a meeting, go to the bathroom, but do not miss the food. There's also some snacks. I get very hungry. I'm on a keto diet because it's good for your brain. This is true. If you know anyone with a brain injury, they should be on a keto diet because it's good for your brain. So if you're hungry, I've got some like nuts and some cheese chips and things, jerky, help yourself. And lastly, I hope you were all paying attention to that big, long thing about these sponsors, because you may have noticed outside the step and repeat. Does anyone know what a step and repeat is? Because I had no idea. I was like, what is a step and repeat? It's that sign with all the logos on it that looks like you're at the red carpet, right? So here is another contest, and you are going to win, I forget, but oh my gosh, a free conference registration. By the way, I heard they're doubling the price next year. I don't know, I have nothing to do with it because I got kicked off. But at any rate, someone here will win a free conference registration that's worth like, how much does it cost to come here? Like, however, $1,200. So this is worth it, right? If you want a free registration. You need to get your picture taken with a sponsor. Remember all those people who stood up and they were like, hi, I'm really embarrassed right now? Grab one of those people, get your picture, put it on social media, at their company, at SampleCon, you get an entry. If you manage to get a picture with every single one of the sponsors, something great will happen. Okay, finally, because I gotta go, I have 1 minute. That was like 3 minutes ago. Please be honest, open, vulnerable. Like, we're just talking about sample here, right? So if somebody disagrees, it's okay. It's not personal, right? We have different opinions. I want to see different opinions. If people aren't participating, I totally will call on you. I might call you by the wrong name, but I'll call on you. So if I point at you and I'm like, Jim, get up here, just come, just humor me. And then later you can be like, hi, my name's really Kevin. And that's fine. I don't care. So who's ready to get started? All right. So let's talk about money. We're going to talk about money. Show me the money, right? And our first session is state of the industry, the investor's perspective, and I'd like to call Rolf Swinton from IIEX Accelerator to the stage. Please.
No, we're good. Oh, well, first, I think I didn't realize we were going to have a stand-up routine this morning. So first, I think we had a big round of Jackie for a super warm-up for the morning. All right, there we go. Excellent. That's a good prize. We'll need this one. All right, I have, there's 4 empty stools here I need to fill up here. So if I can have Simi, John, Sanjay, and Ted come up and join me, please. Because otherwise it'd be much more interesting. Much less. What did I say? Sorry. Oh, good. I like it. We should run now. For editorial on each other, we should all borrow the cards.
It's a high chair.
All right. This is the investor panel. What we have here is an illustrious group of folks from across who are investing in the industry. I'm going to give a chance to everyone to introduce themselves and give their perspectives. Quick format. We have about 40 minutes for the session. I'm going to run questions for the group for about 20 minutes. And then I've been given explicit instructions that there are lots of people with burning questions out there. So make sure we open up the floor for discussion. Just for a quick background, my name is Rolf Swinton. I've been an entrepreneur for a long time, starting up businesses in the sector, early place in mobile research called Lumi Mobile, and then a subsequent business called Reality Mine. And I have had the opportunity of taking investment from venture capitalists, from corporate investors, from private equity guys over the years, so I've had to tangle with these different kinds of folks in different ways. It's with great pleasure that I'll have the panel go down and introduce everyone.
I'm Sanjay Chad. I'm a partner at Petsky Prunier. We're a middle market investment bank advising companies in the media, information, and technology industries.
I'm Ted Waz. I'm a Harvard postgraduate fellow, and I also am vice chairman of the Axel 360 group and OPITA Global, and we work with sovereign wealth funds, presidents and ministers of countries, and the 50 largest family offices for investment. We serve consultative services across market research, homeland defense, security, and healthcare.
I'm Seema Vasa. I'm one of the co-founders of Paradigm Sample and also CEO of Infinity Squared Ventures, which relatively new into the space, essentially advises, invests, and tries to help accelerate companies in the market research space.
Hi, I'm John Caden, president of Sopris Capital. We are a VC firm based in New York. Kind of on the earlier stage of things, we like to post-seed, kind of Series A investments for full disclosure. I'm an early investor in Lucid. I still sit on the board of Lucid and actually have talked to many of the companies who are here today. So interested in the space and have actually made some real investments in the space.
Superb. And just by way of explaining my title too, under my name now is IAI Accelerator. Just to explain that, in partnership with IEX, the conference series, and Green Book, we're actually launching a new accelerator program this year, which is investing in very early stage companies. So this June, we'll be making our first round of investments in about 10 companies from around the world, all focused on this sector specifically. We're talking about the early stage. We really have kind of a full spectrum of investors here. But let me ask you guys all the first question, why are you here with your wallets as such? Why do you invest in this industry? Why is this interesting to you as an investor or as an advisor to this industry?
I'm here because Patrick asked me to be here, and love to support Patrick. But no, in reality, we're not an investor. We advise companies around mergers and acquisitions and raising capital. We actually helped Lucid in their last round, and have worked with John on multiple occasions. But for us, we cover probably 120 subsegments of the world across the media, information, and technology and marketing industries. And this sector itself is extremely dynamic for a lot of reasons. One, it hasn't been disrupted in many years, and I think this conference is actually an example of some of the disruption that's going on in the industry. Industries that are being disrupted have lots of opportunities for dislocation, which yields potentially very good investments as well as acquisition opportunities. And then I would also say an underlying theme of what we focus on is very much data and technology and the combination thereof. And I think that there's lots of interesting business models that are going on in the market research space where people are not just taking snapshots of data and passing them on, but they're actually building their own databases. They're utilizing technologies to make an industry that in many ways historically was very archaic, much more efficient. And so for us, that's a very interesting place to be. And I think there's been a resurgence of growth, and growth sectors of the economy are always a good place to be.
Good. That's a good one.
Yeah, it's not like I saw it after the sample industry. I got introduced to Lucid and Patrick through a sister company of mine based in New Orleans who happened to know what was going on at the company. So really, kind of what Sanjay said is, we look for industries that are doing something dynamic. Even if the overall industry isn't growing, there are new players coming up doing something in a different way. That's what interests myself and my partners. So there's a lot of you in this room. I've talked to a lot of you. Lucid is still innovating and doing a lot of things where I'm sitting on the board and hearing a lot of these things. So that's what I look for in these companies. It's not specifically the sample industry, so maybe that's not as exciting of an answer as you wanted to hear, but I still think there is a lot going on. There's a lot of new players. There's a lot of different ways of looking at this industry and just market research in general.
For me, just growing up in the market research space, I agree with all these comments. There's a ton of change. And I don't think it's just about new players. It's also mixing new players with old players, because the old players have the relationships. They understand research. There's a lot of tech coming in, and the people that own the tech don't necessarily understand the insights and the research underneath it. So I think there's a huge opportunity to marry those two things.
Yesterday, Patrick, when he was talking about Lucid State, talked about things are muddy. And the market research space is really right now at the bottom of the barrel. I mean, when you look at investment, disruption is going to happen because the space has been lazy, been making money, and really haven't applied a lot of the basic principles. Mm-hmm. Now, Lucid is leading edge on some of this stuff, but programmatic, blockchain, AI, distributed networks, all of that right there is happening all around you. And your competitors are not just the people in this room. Mm-hmm. There's an entire group of industry. I mean, you look at the globe and you've got, $77, $80 billion in the market research space. People are asking questions and collecting answers all around you. In the consumer products and goods space, you're at $500 billion. In the healthcare space, you're over $1 trillion. In the homeland security space, you're over $1 trillion just in the United States. And all of those people are now your competitors. Mm-hmm. People with phones, people with pads, people with wearable devices. My wife's Mercedes collects more information on her car than most of you guys will do in the course of a year. And right now, there's all kinds of legislation, and Patrick mentioned GDPR yesterday, but that's only one in a whole host of areas. So as Sanjay said, the industry is ripe for disruption. And it's ripe for disruption because there's going to be calamities along the way which make incredible investment opportunities. Because there will be winners from that.
Let's dig into that a little bit more. So you mentioned, Ted, there's some of the different potential threats from it here. What do you guys see as some of the biggest threats right now facing the industry? What are the biggest risks in investments you've made, portfolio companies you've had, companies you've advised? What do you think are the big threats, not just even now, but out 3-5 years?
That's kind of a general question. It's hard. Look, I think that you have to have good technology that creates a little bit of a moat around what you're doing. It doesn't mean you have to be the only one doing it, but you have to be doing it in a different way and provide your customers with something a little bit different, whether that means more efficient or something that's what we look for. There's something that's sustainable that you can really grow on. I mean, we get involved in companies that may even have $1 million of revenue, mm-hmm. and we want to, up to like 10. So it's kind of small companies. We want to see them grow from just say an average of 5 to maybe 50 or 100 revenue. How are they going to do that? It can't just be by luck. It's got to be they're building something sustainable. They're taking their time to do it. I mean, they're doing it fast, but they're doing it right. Then to me, that's the most important thing. It's technology. It's positioning. How are you going to position yourself in the market?
Mm-hmm. It's interesting. I actually think that one of the biggest risks is around the consumer, because everyone is competing for consumers' times in a multitude of different ways today, whether it's different screens or channels. And we've seen lots of companies, we've advised companies that have nothing to do with this sector, but they're using questions and surveys to build their own databases, right? So you've got entrants like that who are then just taking that data and those questions and then using that data not for actual market research purposes, but then to target consumers with advertising. And so when you've got that much of an influx of different channels, as well as now consumers getting questions for purposes that are not what this room is about, well, again, there's only so much time in the day, and of course there's a certain set of consumers that likely are happy to answer questions, they get rewarded for it, and those are probably the power users. But I think that the part of the risk here is that there's also a big part of the population that is just getting such an influx of questions that are unrelated to this room that you're competing for people's times in a way that's never happened before.
I actually think it's already happening too in terms of end clients using this type of information. I was talking to the Vice President of Johnson & Johnson, and he's encouraging his Global Insights team to use every source of data possible. And online research is a very small component of it. And his challenge is his team is not adopting that, but he is adamant that if they don't change now, then they're going to be obsolete in the company because everybody else in the company is getting these sources of information. So I think the risk is already here. It's just a matter of how quickly do we adapt.
Failure to connect with the evolving technology and its use is one of the biggest risks, but not recognizing that virtually everybody is your competitor.
Yeah.
So everybody here know Walmart? Yeah? Okay, good. So a long time ago when I was young, it was a really long time ago.
You have to say younger.
No, I don't like her. I'm the oldest person here, so it's okay. A long time ago, I went to Walmart and I met them, and they said, we have 100 terabytes of data. And I was meeting with their chief technology officer. And 100 terabytes of data is a joke today. But back then, it was the largest data set in the world outside of the NSA. And so I said, what do you use the data for? And the CTO said, what do you mean? We have 100 terabytes of data. And the CFO was standing next to him. And I said, but surely you use some of the data for behavioral insights on what your customers or suppliers are doing. And he looked at me again and said, I don't understand what you're saying. And the CFO stopped the conversation and said, excuse me for a moment. He pulled him apart, and then he said, I apologize. We have to go to another meeting. That was risk. If you have technology and you aren't quite sure how to use it, and everybody here has a mobile phone? Anybody here still using a flip phone? No? Anybody here using internet on your phone? Right. Anybody here answer survey questions on your phone? I bet you do, even if they're not from a market research company proper. Did you know there's a company called Inmar in North Carolina, and they collect all of your information from Walmart, CVS, Walgreens, Target, and all of your doctor's offices? So if you have asthma or you have diabetes and you go and you buy your groceries and you pick up your medicine, they know what your profile is. Now, they're not monetizing it, and they're not selling that data because they're terrified of it, but they have it. They're the largest collection of that data in the country. And then you have Google, who's making $100 million a day collecting active and passive data on you. They're your competitors.
And the good news for Walmart is they're actually using that data now.
Yes, they are. Yeah, right. He doesn't work for the company anymore.
No, I mean, I don't work for Walmart either, but there are companies like Triad and WPP,
right.
Who now owns Triad, who are utilizing that first-party data for endemic and non-endemic advertising on their sites, and that first-party data is very powerful. And
on a daily basis, first thing in the morning in every department in Walmart, they actually have a meeting and they talk about what the employees are going to use the data for positioning of their products and how they're going to interact with their customers. Thank you. That's a really important point.
Mm-hmm.
So let's just change gears for a question. For those entrepreneurs here in the room that are thinking about increasing the capital base of their business, how do you guys think about evaluating companies? What makes for a good investment? What do you look for in a company to say, yeah, that's a deal to do?
That you have a reason that you need the money and what you're going to do with it. And that you're sitting in the first 2 rows of the group here. If you're sitting in the back, I don't want to talk to you.
John? Yeah.
Growth. That's the first thing we look for. We want to make sure that there's a long runway of growth. What you're doing is important, and how it fits, all the things I said before, positioning. But if you can grow from where you are, this is what I'm looking for. So you can grow from where you are now. You're going to create value. You're going to create, increased valuation. That's what we care from a shareholder perspective. Generally, and that's other things we look for. We want to be partnering with a great management team. That's important to us. It's not just about some gimmicky product or something like that that's flashy. We're going to be living with the team for a long time, 5 to 7 years maybe. And that's very important to us. How good is the team? Is it complete? How honest and open are they? I mean, those are all very important things for us in an investment.
Yeah, I mean, I think those are obviously base things that companies look for, investment companies look for, and I can't echo enough, and this is from experience and also just talking to people, the team to me is the piece that pulls you out of every scenario possible, because nothing ever goes the way it's planned to go. And so the management team and the leadership team are critical.
The only thing I would add is that, at the end of the day, you're right. I mean, take the money if you can use it and add value. But I think your question was about what people look for, and I think ultimately companies that actually add value in their ecosystem and to their constituents that sounds like a very basic thing, but it's actually pretty fundamental. And one of the sectors that we cover is the marketing tech and in many cases the ad tech space. And you've got thousands of companies out there that look the same. They're basically just trading data or other things amongst each other, and they have no real end client and brand clients at the end of the day. And so from that perspective, actually adding value versus just being a lifestyle business that makes money is pretty important from an exit perspective.
So let me ask you, imagine someone's sitting down talking to you about raising capital from you or from folks you help represent. What do you tell them? What makes any of you a good investor? Why would you be smart money rather than dumb money? What can you do as an investor to really help a company beyond just providing capital?
Looking at me again. Yeah, so I think obviously the capital is the most important part, right? I mean, you're looking for the right amount of capital. There are different types of groups. We happen to be on the small end. So if you're a small company, you can't take in 20 or 30 or 40 million dollars. It just not going to work, right? You may not want to even give up control early on. We're very comfortable as minority investors, and we're very small. So we can invest 2 million or 5 million or in that range, and that may fit very well. So you kind of look at where this group is in stage of investment, size of investment, and see if that fits. And then the personalities, just like we look to the management group to see if it fits with us. The management team should be looking at the investment group to say, hey, these people that we can live with day in and day out. I'm not going to be looking at the operations every single day, but we're going to be asking questions from a board level. We're going to be probing around. We're going to be helpful where we can. We do have a very good network. We know a lot of people. If you're missing a whole marketing function, for example, we have lots of people who could swoop in and help, or financial function and things like that. We're never going to know as much about the industry as all you folks, and I always make that clear. But from what they should look at from us, it's a partnership. It's a long-term partnership. I talk to the Lucid folks, at least one of them every single week, if not many of them every single week. So it's a very important decision to make. But taking capital in is not right for everybody. It doesn't mean you can't survive. You can't succeed without it. I was sitting next to someone at dinner last night who we met 2 or 3 years ago, liked, and they liked us. We gave a term sheet, and he decided not to take in capital. Totally great. I'm still rooting for him. He's in this room. He knows who he is. You don't always need capital to be successful, but you take in the capital, it gives you a little bit of a fortress to go do some things and hire some people and take some risks that you may not be able to do. And you also do have that partner from the outside who could bring in different perspectives on lots of things.
Yeah, I think, I think helping the person know what they want, because I don't think everybody, I read this article and it was really right on, not everybody wants to build a rocket, right? And so knowing what you want from your investor is just as important as what the investor wants from you. And I think a lot of people want to raise a ton of money, but they don't know the wear and tear that's going to be required to take that money in. And so that to me is the most important thing. And obviously experience in the industry and the network.
We look to be able to provide insights either through our relationships, and that's one of the most important things we bring. We're not a large group. We're not hundreds of people. We're a small collective of people around the world who have very tight relationships. So when we're going to extend capital or recommend that someone extend capital through us, then we have to be positive that the relationship we're going to have is going to be productive. And if I'm going to introduce a distribution panel that's going to expose someone to a couple million or 20 million people, then I need to understand that that's a protected asset.
The only thing look, this has been very comprehensive, but I think it would be disingenuous to say that any CEO or management team should look to their investors or potential investors to help them, right? And that sounds, maybe like a negative statement, but the reality is that that's icing on the cake, right? You're getting the money, but the investors are backing the management teams, and that's the most important thing. So people have to have conviction around their own businesses if they're going to take the responsibility on of taking other people's money, because that is a responsibility. But ultimately, there are different types of investors. There's seed investors, there's early stage investors, there's growth equity investors who are, again, funding liquidity potentially, but also funding the next stage of growth in a business. And then there's private equity, which is really more later stage, where people are using some type of debt as well as equity to fund acquisitions, and in many cases are buying the majority of companies. All those things are different flavors, and those different types of investors will add different value at different stages. And look, different investors will have different skill sets. Some bigger investment funds have back office operations group. Well, they'll actually help you, with your hiring. They'll help you bring in consultants. But again, fundamentally, you and them have to be aligned around your business plan, because they're not going to run your company in the vast majority of cases unless they've got very specific operating partners. You're going to have to continue to run the business and be accountable.
The other thing I would add to that is, first-time entrepreneurs don't know what they don't know. So a lot of it seems obvious to me because I've been through it so many times. So if I can sit there and be a right-hand person to the CEO or the management team and say, hey, here are some pitfalls that you may run into by doing this or going down that road. Even with Lucid, we went out and raised another round with the help of Sanjay. I advised them, I said, just so you know, if you go down this road, it's not going to be like you talk to a couple people over lunch and you get a check written to you. It's a huge process. It's going to take management out of operations for a long time. It's going to open up everything. And they didn't understand that until they actually went through it, just as one example. But we get into companies very early, and it's okay to us that they're a little bit of a mess when we get in. And we try to, professionalize them, whatever that means. Sometimes they don't have any corporate books. Sometimes they're missing people at the C level, and they're like, we don't need a CFO. We have this great bookkeeper. We try to tell them to hire up, do the Wayne Gretzky thing, the skate to where the puck's going to be. Hire a good CFO. You can't really, if you can't afford it, you can't afford it. But, pay a little bit more to get things done right and then grow into that. And that's kind of our philosophy.
So let's sort of think about the last stage of the company, about your involvement in companies here for our last question before we open it up. How do you guys think about this industry with respect to exits? Who are you seeing buying companies? What stages do you think people should really be thinking about for trying to find exits in the space, or at least finding liquidity as they go along the way?
Yeah, I'm happy to start. Look, I think it's different. It depends on the stage of the company, right? Because exits can mean lots of different things. I think typically speaking, when you're thinking about exits, you're thinking about at least some form of liquidity. And so, the different kind of groups out there are going to be growth equity, private equity, and strategic buyers. On the growth equity side, it's actually very interesting what's happened in the last 24 months. I think that a significant number of larger funds have actually looked at their brethren who have kind of large growth equity funds, and they're getting these massive returns, but they're also taking majority stakes. And so you've actually had a lot of launches of growth equity funds from big private equity funds, whether it's Providence Equity launching a growth equity fund, CVC Growth, Apax just launched a growth fund. So we're seeing a lot of that, and that's definitely a form of liquidity. Private equity has had a lot of interest in this sector from day one. I think that the models that the highest values come from ones that have some form of recurring revenue, where there's predictability in the model, and that yields more leverage, which yields a higher price, et cetera. But there's also, if there's 3,000 or 4,000 private equity firms, kind of in our CRM as a firm, there's probably 100 or so that probably would have a very good understanding of this space, and so you want to find the right groups there. And then on the strategic side, I would say that there's actually not a ton of deals that have happened in the traditional market research space, versus maybe some of more of the technology-enabled or software platforms. And what's happened is that, of course, as industries mature, you're seeing multiples come down a little bit. You're seeing the traditional market research agencies. You're seeing a lot of the private equity-backed businesses. You obviously saw a big merger with Research Now and SSI in the last year, which I think is a reflection of this group. A lot of the changes going on in the marketplace, where you can have sample at a faster speed, at a faster volume, is causing some of the traditional guys to think about where do we fit in the world. And then, I think that as we see more of the technology businesses in this sector, we should look for some of the bigger companies that touch data in different ways. The big data companies, even folks like Google and others, to think about exits in the sector.
Any other comments?
Yeah, just to tell you, I rarely think about exits. When I start to think about exits, I call Sanjay, say, hey, what is there one out there? So when I get involved with a company, if the pitch on like page 3 is all about how many exit partners there are for this company, as soon as we blow it out, I get a little turned off. I still listen, and it still could be great, but I don't worry about exits. I want to build the companies. It'll come if you do the right things and you build all the building blocks. So I do think about exits, of course. That's how we get paid. But
I can attest to that, because I showed John a deal at the end of last year that he said the CEO came in and talked about all the exits.
Right.
You know what deal I'm talking about.
Exactly.
And somebody else did it, and John ultimately passed. So.
Right.
And one thing I would just add, as we're setting up the accelerator, we looked at all the deals over the last 5 years in this industry in terms of exits. What we did find was one thing was sort of interesting, I think specifically about our industry, is because there's not a lot of corporate players, there's not a lot of transactions like there are in other sectors. And so you have to think carefully about how much capital to raise, because there's really is a big gap between companies that are doing $10, $20, $30 million then to get to the next stage, which is in the hundreds of millions of dollars. So there's quite a big death zone. And so just in doing our own analysis, one of the things we're thinking, how do you help companies be mindful that your exits, if you get too big, could be a long, long stretch to go before you get to that next stage, which is not necessarily the same in other businesses. And so just be cognizant of that.
Well, the reality is in the marketing and advertising sector, which this segment can fall under, the vast majority of exits happen below $250 million of enterprise value. So as you get to a higher scale, 250 to 500, 500 to $1 billion, north of $1 billion, the number of exits in a given year drop dramatically. So there is actually the idea, which sounds silly, of getting too big, because ultimately, as you get too large, you can actually price out a number of your potential buyers.
Right, and even that can come to raising too much capital.
Yeah,
You're trying to be too big, but don't have a business to support that. Good. Well, we've got about 10 minutes for opening up for some questions to the group. If there's questions, or we can keep going. Anyone have burning questions for our panel?
Really? Just how lazy are you guys? Yes.
Jonathan Deitch from P2 Sample. I find it interesting to sort of listen to you talk about all of the opportunities in the industry. And if we think about where we've even come from over the last 5 years, I wonder what your perspective is on right now. Are we in a place, in our particular sub-segment, if you will, of the industry, are we in a place where you believe that the investment opportunities are increasing, are sort of staying steady? Have we kind of come off the boil a little bit? I'm just kind of curious where you think the market is right now.
Yeah, I don't know. You know, I never look at things in a macro way like that. It's just what I do. I meet companies, you know. So, and it could be, again, I don't invest only inside this industry. So, I mean, technology, service-enabled technology is what we like. So this is perfect inside of that umbrella. But look, I've seen. Before I came here on the flight over, I looked, you know, what companies in this space have I looked at over the last 2 years, and it was like, you know, 6 or 7 different companies, all valid companies, some of them here, and yeah, I would say it's maybe picking up even, but again, I don't count. I mean, I don't do a macro view like maybe on the banking side that they're trying to cover the whole universe and see what goes on. I just get introduced to interesting entrepreneurs, and I look at very specifically whether this company has something interesting, this company is growing, this company has a great management team and can take it to the goal line.
We look at things also from a technology perspective. So I don't necessarily just say, oh, I want to invest in a market research area. What I do say is I want to look at how is this segment using technology, and is there an opportunity to help propel forward in terms of the growth because of that use of technology. Now, if that's the case, then there are lots of new investment opportunities as people start to expand their understanding of the use of big data, which 73% of big data projects fail and are not getting the returns on investment. How they're using thick data, which is contextual data related to big data. How they're using mobile, smart devices, media, all of those blockchain. And blockchain and cryptocurrency are not the same thing. Mm-hmm. So don't make that mistake. Blockchain is like the internet that's on your phone right now. It's that foundational of a shift. And virtually every Fortune 1000 company is engaged in some activity related to blockchain. And connecting that for users is going to be important.
Yeah, like I do cover things from a macro and then specific level. I would say that, you know, broadly speaking, technology-enabled businesses, technology companies, we're definitely at a very good market. There's more investments being made. I would say within the market research space, it's pretty steady. The nuance there is I would say that, you know, SaaS software companies in this space or SaaS business models in general are highly coveted because of the recurring nature of the revenue, because of the nature of the contracts and how they work. And I would say in this segment, in any segment broadly defined, those are businesses that are trading at the highest values and people have the most interest in.
Yeah, we took a data-driven approach on trying to find companies to invite to participate in the accelerator program. We took the grit report and we said, okay, what are all the things that people are looking for, problems they need to solve, they want technology to solve, kinds of businesses they want to solve. And we then said about scouring the world, doing searches, crunching it all. We got an initial list just this year, we just finished this up for our first wave, 2,500 companies around the world that are solving those problems that are all very early stage companies. So I think when you take that list, if you look at the group report, you look at all those things, those are just the companies we could find, and that's through people, you know, putting stuff in Crunchbase and other databases like that. There is a pile of companies doing really interesting things. Most of those companies, I would say close to 95% of them have never heard about market research. But we're reaching out to them, we're saying, hey, your product serves this industry. And they're like, oh, really? What's that? So I think that when you think about the addressable market space, it sort of goes two ways, because guys like, interesting, is that worth focusing? Oh, maybe, maybe not. And so there's that process, but I think there's a lot of companies that are building a lot of things which are solving the problems which people in our industry say they want solved. And I think that makes, I think there's a lot of opportunity there.
I was just going to say, in the sample industry itself, it does feel like, and again, this is just an opinion, there's no raw data, that we do all use technology, and it almost feels as if we're doing Me Too technology. So there's a leader in terms of building a DIY platform, and over the last 12 months, the proliferation of that has just increased tremendously. So I'd be curious, these are all technology-enabled companies, but they're similar in approach, and how do you guys view that? I'm asking you guys.
That's a good question.
I mean, they're technology enabled, they're, you know, good management team, but the industry kind of has many of them already.
Yeah, I mean, look, from our perspective, what we look for, because, you know, we do turn down assignments,
Yeah.
we take down everything that comes our way, and we turn down a fair amount. For us, it starts almost similarly to what you guys talked about from your perspective about why you invest in companies.
Yeah.
Like, you could have two companies that look exactly the same, have the exact same financial profile, and you've got one management team that just stands out.
Right.
You'll gravitate towards that every single day of the week. So I think management team, number one. Business models matter a lot also. You know, there are a lot of companies that are heavy services. There's nothing wrong with that. I would say that you have to then dig deeper and say, okay, you know, professional services businesses, they have their own inherent risks that are very different than technology-enabled businesses that have their own risks that are different than, you know, software companies.
Right.
And so we very much look at the business models. And then there's obviously key metrics that matter. Gross margins, as an example. So, you know, what are the gross margins of a company? Someone comes in and says, you know, we are a software business, but they've got, you know, 25% gross margins. Well, that doesn't smell right. And so we look into the details around the financial profiles. But I come back to what I said before, which is adding value. And I think if someone can fundamentally talk about how they're serving their customers have a long-term need, or whatever long-term means these days, from a visibility perspective, you know, by utilizing that business, for us, that's very meaningful.
More questions from the audience? That's a quiet group. Not enough coffee this morning yet. You take Jackie's
no entrepreneurs.
advice. So, let me ask you guys.
There's a question.
Oh,
back
one.
there. Were you looking for coffee?
Yeah, Lewis Rees from Vigor. I guess one thing we've not really spoken about this morning is around public offerings. And there's lots of different ways that I could pose a question on this, but one would be around the exits point and how you would advise entrepreneurs or sort of business owners of utilizing public offers as a way to get some sort of liquid value out of their organizations, if they don't necessarily need huge amounts of capital to continue growing.
If you don't need huge amounts of capital to continue growing, why do it? You shouldn't take money just for the sake of taking money. And going public, whether it's through an IPO or an ICO, those are things that have consequences. And they have added regulations that follow them. So, you know, there are lots of folks who, and you know, the whole blockchain ICO, cryptocurrency area is, you know, rife with that right now, where people are, you know, writing a white paper and then trying to raise $5 million. And there are people who are insane enough to invest in that. But what's happening is that the number of lawsuits going after those people are skyrocketing. So again, the question is, do you need the money? What are you using the money for? What sort of relationships do you have with your investors? And are you servicing value? Do you have the right team?
Yeah, going public is very different, as you know, than selling your business. You're now dealing with a litany of shareholders. You've got investor relations. You have significant public company costs. But I think more importantly, companies by and large need to be of a certain size and growth, because you ring the bell, you go public, and that's in the traditional way. And there are lots of other ways, and you referenced some of them, but there's other ways. There's lots of SPACs that are out there now, special purpose acquisition vehicles that are out there that you can basically back your way into a public offering. Whenever you kind of get to this height of the market, there's all these kind of nuanced ways of getting to a public offering. But once you're public and you wake up the next day, you've got to manage your business in a very different manner. It's for a quarterly basis. You come out of the gates and you miss your numbers the first quarter as a public company, you're basically going to blacklist for many years to come, and your liquidity goes down. By the way, liquidity is not really an option for management teams in a public offering, because it sends a lack of confidence to the public markets. So the investors, many times, they get out in a public offering, but the management teams actually have to sign up for a lockup period of 9, 12 months or even greater. So look, I think that the bar should always be higher for a public offering, and it should be very much about scale and growth and predictability, because business models that do not have a good amount of predictability, in my opinion, unless they're of a significant scale, should not really be going public.
Any last
Yeah, I don't look at IPOs as for exits. In fact, I just got off of a public board company. Actually, we were in it for about 10 years, 11 years, and the exit, actually, we still had to sell the company even though it was public to get, management and early shareholders to get out. So it's very difficult, a lot of regulatory costs and burden. Half of our board meetings were taken up with 10K, Q issues and things like that. But, it could lead to some excitement when you have some consumer-facing, Uber-type companies, and there might be some excitement to that, and then your users can be shareholders and Facebook and things. So that's what you look at. But most companies, it's probably not the best life cycle ending for them.
All right, so just as we wrap up, let me ask you guys one last micro question. There's someone out here who is desperate to raise capital. What's the best way to reach out to you guys to talk to you about that?
Like physically reach
Yeah,
out?
should they email you? What should they do? What should someone do? Should they just go up and
I'm an open door policy. I mean, I listen to everybody. Even if we're not investing, I always have advice or say, hey, when you get to this level of something, then we'll look at you. Or if you're not right for us, I know somebody down the block that is later stage, earlier stage, something like that. So please feel free. No problem at all.
Yeah, same philosophy.
Okay.
Yeah.
Great.
Yeah, I don't want to talk to. No, if I'm actually going to be here for the whole conference because this conference actually intrigued me. So I'm here all the way through Friday if you want to chat with me. I am, despite this face, very approachable, and I really do enjoy conversations. Yeah.
We talk to everybody. It's not always a great mutual fit, but like John, we have an open door policy, and we love to have conversations.
Awesome. Well, great. Thanks all for sharing today.
Yeah, thank you.
Thank you.
Good. No, thanks, Andre.
Okay, thank you very much to the panel. Like they said, they'll be sticking around if there's any questions. So we're going to keep things moving. I would like to invite fellow founding member Mende Oremland to the stage. Where is Mende? Oh, where is he? And fellow board member Nancy Brigham. Here's Nancy. Oh, Mende's over there.
We're going to do just dialogue. Are we on? All right, so let's get Courtney and Joe up here as well. Courtney, come on down. Nice. What are we doing? All right, so we're going to try to get back on schedule here. Rachel, what's kind of our timeline? 45 minutes.
Right there. Oh,
all right, so to kick things off, before we kind of do a quick round of introductions here, I know Jax, who started this event today as an MC and so graciously introduced many of us. I think she should rise, and everybody should give her a round of applause for everything that she's done for SampleCon. Now, initially, yes, she was getting thrown off, but after that, we're trying to bring her back. So please help us out. She's obviously very welcome back. And one more thank you. I think, it's not easy to put together a conference. Many of us have spent hours, days, weeks, months putting this together. And this is our first year out of New Orleans and in Austin. So I think a big thank you to Rachel for putting this together. Year one in Austin is not easy, so thank you. All right, so before we kick things off, how about a quick round of introductions? I'm Mendy with Prodege.
Nancy Pergun with Ipsos.
I'm Courtney Williams with Lucid.
I'm Joe Jordan with Cint.
All right, so perfect. So for those that have attended, I don't know why I'm holding this. Jacqueline, help me out. What am I doing? Who am I shooting? What am I doing? All right, props are good. So for those that have attended before, and for those that haven't attended before, I think SampleCon has a, we always say in the spirit of SampleCon. There's that saying that we've said for the past few years, in the spirit of SampleCon. And what does that mean? The spirit of SampleCon is exactly what was explained earlier with all these fancy pieces up here, but it's all about a dialogue. It's all about a conversation starters. I know many of us go out to the, the water stations, the coffee stations, but it's really, why don't we bring it here? We're all a family. We're all in the same business. We're all doing similar things, competitive things, but we all have what to learn from each other. Competition is great, brings out the best of us. And the goal of SampleCon has always been, let's bring it to main stage where the unspoken is spoken. And I think we've done that for many years. And I think the goal of this, this discussion, this session, is to really, this is not a panel. We have this panel up here in case people in the audience don't want to talk. But this is about expanding the panel to our audience, to everybody that attends SampleCon. As we all know, this group is, I think we're a group of entrepreneurs, a lot of smart people in this audience, people that run successful businesses, that have done many things for this industry. So again, we're here to try to kick off a series of various topics within the sample market research industry. But we're hopeful. It's really about trying to get the audience to share their opinion, bring out, don't be shy. That's what SampleCon is all about. Speak your mind. And we'll try to go through a series of topics that are, some of them have been discussed before, but hot topics that go around. And we really want the input. It's not about Q&A. It's about expanding the panel to you, the audience. All right, Nancy, you want to kick us off?
Yes. Hi, everybody. And I'm going to try not to cough into the microphone. I am getting over a cold, so I have my water. And my cough drops over there with my colleague. She's going to give them to me if I need them. So the first thing we wanted to talk about is how do we, as an industry, adapt to the changing landscape. So the landscape is changing. Respondents have changed. Clients have changed or changing. We have a lot, our industry has kind of grown. We heard from the investors panel that there's a lot more players in here now. I work for a full service research agency. I come from that traditional viewpoint. Life isn't traditional anymore. How do we adapt? How do we become more agile? And I'm going to be kind of provocative and say, why do we seem so resistant to change? And I'm talking, we love to blame the clients, but that's not actually true. I think we ourselves are more resistant to change than our clients. Mm-hmm. And we are the first line of defense before, to have our clients do anything. So I want to discuss this. How can we be more agile? How can we be less resistant to change? And so just to give you an example of one we all know right now, why is it taking us so long to go to mobile friendly? Like, seriously. So yeah, this is...
Why are we clapping?
Yeah, well, that's a good question, yeah. So why is it going, why are we so resistant to change?
Yeah, so let's get the microphones ready, because again, we want to hear from folks in the audience. One thought before we kick it off to the audience, why are we mobile and resistant to change? And I think, here's the reality. If a research project or a study needs to get done and it's getting done, why change, right? So a perfect example, let's use mobile, right? And I think, although there's been, we've seen in the data, and I'm sure many of you have seen, it's not like we're not heading in the right direction. We are heading in the right direction. I think a year ago, 2 years ago, we were way behind, and things are moving, just moving a little slowly. Why is it moving slowly? In my opinion, just kind of a frame of reference of how it could change pretty quick as it relates to a sample project. If today clients and the cost structure behind a project is on a CPI basis, cost per interview, right? That's the unit economics. That's how we do things. Not saying it's going away. I'm not changing anything. I'm not advocating to change it. But just a frame of reference, if the unit economics, or not the unit economics, but the pricing structure, the pricing model change from a CPI to a CPC, I promise you, mobile would be out. It would be done already. We'd be 90% through. But because you're not charged on a CPC, on a cost per click, what does it hurt anybody that's paying if it's not your audience that's being affected, not your panel? So again, I'm not advocating for one way or another. I'm just saying, why change? Why should we change? Anybody else? Let's hear why are we resistant to change in mobile. Raise your hand. All right. Hold on, we can't hear.
Yeah. There we go.
I think that people aren't necessarily resistant to it because you're blind if you think that it's not going to be required of us eventually. But I think the big challenge that certainly my clients are trying to overcome, I'm trying to help them, is that they don't know how to change the things that they're used to seeing in the long grid survey and getting it into another place. So I think it's up to us to help them do that. I'm curious to other people in the room. Thoughts on that, on the ability to know how to transition from non-mobile to mobile?
Lisa, we need a microphone up front.
Hi everyone, Lisa from Innovate MR. I think, from my perspective, it isn't so much about design and how to render it for a mobile audience. And it kind of reminds me of like when we made the transition from Katie to online research way back when. There's always challenges with that. However, there's a lot of research on research. I know, Nancy, you've been doing a ton of work on how to make mobile work. I think it's related to something different. I think it's about the fact that we are hoarders of data. And we don't want to limit ourselves, and we're kind of throwing everything into the kitchen sink, and we're not having that dialogue of saying, what do you really want to answer? What is most important to answer? Let's leave the other stuff on the sideline and really focus on what matters. I think right now our clients are dealing with a lot of internal constituents. They're trying to keep everybody happy, get all their answers, all the questions answered, and that yields these 25, 30-minute surveys, and that's just not what fits within the mobile realm.
Well, let me challenge that a little. Are we not doing our job? Are we just by saying, and I come from full service, so I'm doing the same thing, okay, you got to cut it down, instead of saying, how do we think differently about how we do surveying? So that's actually at Ipsos, that's one of the conversations we have a lot of internal sample conversations where we bat these ideas around. We don't know the answers necessarily, but how, is even surveying, should we even be doing it the way we've been doing it? Like, should we be serving out one question at a time instead of a full survey? Like, these are the kind of questions I think we need to ask ourselves. What do you guys think?
I'm honestly tired of talking about mobile, and I think it's not going to change until people say no. Like, sample companies aren't saying no because they know their competitor will do it. Full service market research companies aren't saying no. Until people say no, I don't think it's going to change, unfortunately.
That's a very good point, and it also brings me to something that I've also considered, which is, do you think it is contingent on the larger suppliers, the larger clients to make the change? Because it is really hard for a smaller company to say, I'm not going to field a 30-minute survey. At Ipsos, when we did it, I looked at it as an opportunity to kind of right some of the wrongs when we moved from mail to online. We just took our mail surveys and we put them online. We said, oh, it's the same methodology, apparently. And so this is the time for us to kind of internally say, we're going to right some of those wrongs. I was able to sell that in my company, which I was really surprised at, to be perfectly honest, because I would advocated global limits, and there's 2 people in the company that are allowed to approve any exceptions, and I'm one of them, globally. That was a tough sell, but I did it, and I was really happy. And I wonder, it makes me wonder, like, what I said was that as a company like Ipsos, where we have a lot of clients and we're a large company, we have the ability to be able to force change. And should the larger companies, the larger clients, because as soon as the larger client makes changes, we start saying, well, so-and-so did it to our other clients, right? And they go, oh, maybe I should. So that helps. I mean, what do you guys think?
So let's move it to the next one. And just a final comment, Brian, on that. I know we're tired. I'm also tired of talking about mobile. I think things are happening. I don't think we realize. And I think the fact that there's a void and there's a problem, it creates opportunity for disruption. And that's why there is, I think, a sample con. And there are companies that are emerging because that is the attitude is, hey, it's not hurting. And guess what? There are companies that are figuring out how to make a difference. And that's what this is all about. Let's move on to the next one. Because we want to get through a few topics. So Nancy, obviously, everybody here, I think, knows your tenure in the industry. What is it, 20 years?
Yeah, somewhere around there.
Okay. So 20 years in the industry, and I think there's a lot of experience up here as well. Courtney?
Oh, longer than I want to admit.
Okay.
Since about 2002.
Joe?
Yeah, since '94.
Okay. There's just a lot of market research up here. What about me? I think 5 years. But, so I think for me, it's super interesting to ask this question to you, Nancy, and fellow colleagues up here, but to the audience, which again is somewhat of an obvious one, but I think it's so interesting to bring a perspective of 20 years to 3 years to 2. Some of us are 6 months in. So DIY, API, programmatic, automation, and all these words that maybe were buzzwords, they continue to be buzzwords, but it's happening. I mean, it's happening. Everybody's trying to figure out what their automation strategy is, what their programmatic strategy is, DIY, API. 20 years into this, what do you feel? How do you think of what everybody else is talking about?
So I can give you my opinion. It's just my opinion. I'm afraid that DIY is hurting our industry. I think that people don't know how to do surveys. Nobody's trained anymore on how to actually write a good survey, and they have no idea how to sample or how to even think about a target audience. And so DIY makes me nervous.
Nice. I think we're going to get a lot of hands for that. Let's go, Matt. Matt Dusig. Let's get a microphone up here. Jax, now's a good time for some shooting, right? Right? Matt, go ahead.
Okay, Matt Dusig, Innovate MR. So I think back to the days before kind of Google, standardized online advertising. I think there was a lot of fear and misunderstanding, and there wasn't a lot of know-how, and there were intermediaries who handled ad buying, and now just everyone goes on to Google and ad services and buys their ads, and they know how to do it, and they're trained, and Google offers all sorts of service and full service solutions to train people and to educate, and they have sessions. And so I think we're at that point where I do believe that samples should be procured programmatically or automated. I will go so far as to say that I do believe the future of sample should be on a cost per click basis for the benefit of the value of the panels and the panelists. Because we can't claim that panel quality has suffered, but then not care that panelists are burned and that we're not paying them adequately for their time. So I believe cost per click is the way to go. But so I think we're just at a place where training is required.
All right, we got hands right over here.
Jim Whaley, Innovation MR. With regards to DIY, I'm kind of a little bipolar on the issue because as it relates to the end client, I think that there's plenty of use cases where it's working just fine. We all know companies like Qualtrics, who've been very successful in the space, and others, SurveyMonkey, the list goes on, putting technology in the hands of our clients who are very adept at using it for many different types of purposes, A/B testing, message testing, things like that. And one could argue that it works fine. And for many of them, they're very successful at using it for things like concept tests and segmentations and so on and so forth. There's limitations to some of those tools, even though they become more sophisticated over time. But notwithstanding the tools themselves and their capabilities, every individual user has their limitations relative to their experience and their training. So we as practitioners are here to solve those problems. Our experience in doing thousands and thousands of surveys over our career, over lots of different types of industries and different types of conditions are supposed to lend that experience to our clients' particular problem, where a particular client doesn't necessarily have that experience. So I think DIY relative to the tools and the experience set that they have doesn't match up. So I think it is problematic. Then you lend the issue of sample to that and the experience of dealing with sample and the logistics of that, it just compounds the problem. Programmatic. Look, as a company, as a relatively new sample company, starting out quite successfully, I might say, my model would be not to add lots and lots of new people as my company grows, but to think about adding more and more programmers to capitalize on the opportunities of programmatic at an equal rate to adding sort of the traditional model of project managers, because that's where the opportunity is growing in this business. So that's my take on it.
Let's get one more and then move on to the next one, next topic. I think we got right.
For the DIY perspective, I think it really, I'm Scott from Branded Research. We are opening up research to so many more people. I'm not even sure I would know how to go run a TV ad, but I've run hundreds and hundreds of Facebook advertisements. And there was no real formal training that came along that was like, okay, this is how you're going to run. You just have to kind of run experiments and figure it out. Obviously, there can be a lot of formal training that's built around all of that, but we really had to have those tools to begin with. And so I think the DIY is just exposing so many more people to research and opening up the opportunities for us to just expand our tentacles into other ways of doing research. And so I wouldn't discourage DIY.
All right, moving on to another topic. Just curious, out of maybe a quick raise of hands. I know that there are a lot of sample and panel companies here, obviously, that operate panels. How many of you, and don't be embarrassed, how many of you are frustrated by the damn DQ? The DQ. So if you're operating a panel and you're spending in user acquisition, panel acquisition, and your panelists come in to try a survey, and 9 out of 10 times they're out the door.
Hands up, guys. Come on.
No? Okay. So Matt, would a cost per click model solve for that maybe? Because now you've got to be careful because you're going to pay for that click?
I call it, in my head, it's cost per targeted start. It means you target the people you want, and then you pay for the survey start. So not just a click. So there's a little bit more to it. Buyers, the same thing on Facebook. You log on to Facebook, I say 18 to 34 men in California. Okay, I'm paying for that click, but it's a targeted click. Same kind of concept. So, I mean, the DQ The problem is that, and there has been forever, a lack of integration between survey software quotas and sampling system quotas, so that the two can't communicate, which means that if the client tells us to deliver a sample, but then quotas are changing and being modified in the survey software and it's causing disqualifications, and we don't have transparency to that, then we are burning real people who are getting frustrated, and we're not getting paid. So I think there's a number of issues, but part of it is tech integration.
Right, which kind of leads to another point, and then we'll come right here for a question, but something that I've heard from many companies that operate panels, which is, right, we always hear data. Data is so important. Data, profiling. We need more and more and more. Do we even use this? Aside from targeting, what is, like I have Jim, like I have this moment at times, like, rich profiling, let's go. We're gonna have everything, and then the next day I wake up, I'm like, what on earth is the point? Nobody wants it or cares for it. So who is profiling? Does that even help? Sorry. Does it help just so we can provide feasibility? Or do people actually want to trust and utilize the data that panel companies provide to do something with it?
They don't trust our data.
So why are we profiling? Why don't we go back to just a router and go get what you get?
Yeah, or put it on the survey.
Why profile? Just get a router going.
I was just going to say, I mean, you re-ask in every single survey, right? I've been dying for universal demographics for like 15 years, and I've lost all hope. I don't think it's ever going to happen.
Don't lose hope. Don't lose hope.
Still working on it.
But, you know, that was my earlier point, is that, you know, we're hoarders of data, and we want to collect a lot of data, but we're not always using it in a really smart way. We're not sharing it with other companies or with our clients in a smart way. And so it's, you know, I was thinking what Matt was saying, you know, about CPC and, you know, kind of the environment that we work in now. If you think about it, you know, the average conversion rate on panels, guys, let's be really transparent and honest here, is like 15% on like the best day, okay? So that means 85% of the time our respondents are having a negative experience. Would you do anything if 85% of the time you weren't successful? You'd move on. And so I think we really, as an industry, need to rethink how we treat respondents, how we engage them. And I love, Nancy, how you're talking with, you know, your organization. I think you've been an absolute thought leader in the space about, you know, changing the whole paradigm and you know, instituting these rules of engagement at such a large company like Ipsos. I just think you're amazing at doing that, and that's great. But you're also an anomaly, and we need to change that.
All right, we got a comment over here. What's your name?
Hello, my name is Ben Tolchinsky. I'm with Cox Communications in Atlanta, and I don't know how many here represent the corporate community. It may be few, and so I will do my best to represent the corporate community as I can. I have a lot of comments, a lot of thoughts as it relates to these topics. You know, as it both as a panelist myself, who's on a number of your panels and who gets frustrated, who monitors the situation, and I do get frustrated by disqualifying from 9 out of 10, and that's a frustrating experience. What we do, you know, at Cox, and I was invited to speak tomorrow as well, and to give a perspective from the corporate side, but you know, incidence calculations, and not surprisingly, are very important, and DQing 9 out of 10 in some cases is very important from an incidence to our business. And you know, what we will do today is apply, you know, do rep screening up to a certain point to identify the incidence calculations, and then wait to those proportions on the back end, you know, as a mechanism to not have to screen through however many folks. And I don't know the extent to which that's being done more broadly, but maybe that, you know, I don't know if that's something that is leveraged to help that issue with tons of DQs.
Thank you. All right, let's get another topic in here. Nancy, what do we got?
This one is a fun one. So, you know, Meatloaf said you can't have all three, but 2 out of 3 ain't bad. So my three are quality, speed and field, and low cost. Which two are you taking? What's the trade-off?
All right. We got some comments.
Hey, Mindy, it's Mark from Focus Vision. When you guys talk about the three things there, the fact of the matter is, because the suppliers have had kind of a race to the bottom, price is never going to be an issue for this industry. If there's 5 suppliers here that can't provide those 3 things, I can go to 5 other suppliers and they will. You know, we buy close to $20 million a year in a sample. I probably shouldn't have said that in this room. A year.
All right, we're done,
But-
everybody.
Yeah.
Mark's over there.
Nobody heard that.
Yeah.
Move on. Nothing to see here.
Let's ignore that. But my point of the matter is I don't, as a buyer of having that sort of buying power, I don't have to choose between 2 out of 3. I can get all 3, especially price. And if somebody, you know, if Prodege won't do it, somebody else will down the road.
Let me challenge that, though.
Sure.
How do you know you're getting higher quality? And what level of quality is okay? So I can't give you a $2 CPI and give you really high quality.
Mm-hmm.
Can't do it. Or I could if I could be in field for a month.
Right.
You know, so there's trade-offs. So Mike, and this is where I struggle, is like, what is that trade-off? Like, where do we put quality in this? If you want a fast field, you want really low cost, do I start thinking about quality as a tiered thing? Like, oh, you can have these people on my panel because they're not that good, and then I'm going to save my really good people and charge more. Like, so there's like, it has implications for how we think about it. So my question is, what level of quality is okay?
Well, I don't think there's levels of quality in this business. I mean, you're going to have, it's pretty much binary. You're going to have good respondents or bad respondents. And, you know, that's one thing that we do on a daily basis is, you know, keep track of the providers that do provide the good quality stuff. And we measure these things with metrics internally. How many times are we throwing people out? How many times do we have gibberish open ends? How many times are we having to, you know, refield for issues? So we do track stuff, I promise. It's not just all $20 million. But so we look at all 3 of these things, and obviously they're constant moving numbers, right? So it's not something that we are doing passively. It's something we do actively to maintain this. And I would, you know, obviously encourage anybody that's doing any kind of buying of scale to do this as well.
So perfect segue, I think, from one quality to the next quality. So I think we see at times, like when the topic of quality comes up, everything gets lumped into quality, but there's different aspects to what we call quality. So is the data, right? So here it's a data quality. What does the data look like? Again, in the spirit of SampleCon, I think there's another topic we should bring to the forefront today, which has probably not been spoken before, but there's another quality issue plaguing, I think, the industry related to bots and fraud and manipulation of links and stuff like that that's happening. We're not here to freak anybody out. Okay, you're already freaked out, and especially as the industry and the world continues to evolve into a programmatic automation. This is just the nature of it. By the way, it's not just market research.
No.
This is a problem everywhere, advertising too. So again, the point here is not to freak us out, but Courtney, Joe, maybe speak a little bit. I know you're very involved in the technologies and the automation, and you're seeing some of this going on in the platforms.
Yeah,
maybe you can tee this up and share a little bit more, and again, get audience participation going here.
Sure. So I would say first, in ad tech, this is between a $16 and $17 billion problem a year. People cheating, stealing is really what we're coming down to here. And doing that in a way that's not face-to-face, it's not personal, makes it easier. And programmatic makes it even easier. So when I started in Sample back in the day when you had to walk uphill both ways to school in the snow, we just, we had these redirect links. We were just trying to figure out how to do a technical handshake, and just explaining how to pass two variables to a client that didn't even really know how to log on to the internet at that time was really hard to do. So we didn't really think about anybody stealing that information, because we also didn't see it as all that much of a commodity. I mean, what we were paying people to take surveys was nothing on an individual basis. And so scaling that, repeating that, and making that something that was profitable for someone to steal from just wasn't even in the books, am I right?
Yeah.
But today, you flash forward a lot of years, it is. So we have to find ways to mask that, to make, or to guarantee that something hasn't been tampered with. So things like hashing.
How many people know what hashing is?
Yeah,
do we know what hashing?
Who does not know what hashing is?
So maybe give an overview on hashing.
Hashing is very basically a way to ensure that what comes back to you hasn't been tampered with along the way. And that's really kind of taking it baseline. There are a lot of really very smart people at my company who can tell you all kinds of technical details about it, but ultimately it's just a way to understand this thing hasn't been messed with since it came back from a survey instrument. And then we have also secure client callback, which is really exciting, and I hope becomes the way of the future and a future standard in our industry, where essentially the programming platform makes a call over to who's receiving back the confirmation of complete or terminate, whatever the status is, and says, this is what happened. This is a valid complete, and it never is shown to the respondent. You can also do the redirect on the respondent like we traditionally have, but it's peer-to-peer, if you will. And what's fun about that is that you only have to do it on a few different platforms, because there are no more than 10 or 15 major survey programming platforms out there, but there are thousands and thousands and thousands of us doing research. And we all do hashing just a little bit differently if we understand it. So that's why I would suggest that secure client callback is the way of the future. Joe, I'm sorry, I've kind of taken over the time.
No, I think, we're just trying to use different tools to kind of catch the same culprit, right? So we're all using digital fingerprinting, and we're analyzing data, and we're using the algorithms and trying to find, the root of the evil that exists out there in fraud. And fraud is nothing new. I've seen it, in my career as well. But it just evolved. It evolves every year, and it becomes, more of a, catching malware than just finding a handful of people who, hacked the system, in the early 2000s. So I think it's important to kind of, be diligent. And one of the things about equality is that, as a platform, you do as much as you can to prevent fraud and prevent, the automated bots and the VPN lines and everything that kind of starts at the beginning. But then that overarching quality needs to involve everybody in the room. So I think there's multiple combinations of, what does quality look like, for a client? What does quality look like for this project? What does quality look like to us as a platform? What does quality look like to the market researcher? So if you can have that communication and understanding, then I think there's lots of different ways we can all kind of chip at it in different pieces, but I think that's another topic as well.
So just an interesting perspective, like, Prodege, we weren't always in the research space. We operate other properties and businesses, but when we first kind of got into the market research and sample space, and our developers learned how we recognize a completion through this concept of a redirect, they said, there's no way we're doing this. They were floored the fact that the way you count the complete is through a client-side redirect, and they didn't want to touch it, right? So it was just very interesting, just a perspective. And I think, are you suggesting that, like, how do we secure these callbacks, these completions? Who do we need help from? Is it the survey platforms? Is it panel platforms? Who do we need to talk to make sure that we can get a server-side callback so it can be secure?
We're presently working with several program platforms to institute this. And I would suggest that, one of our goals is like 50+% of all of our traffic this year for secure client callback.
And are those difficult conversations, or everybody understands the need for it?
Well, I think everybody wants to reduce theft, so it makes it easy to have the conversation.
Cool. Yeah. All right, we're running out. Maybe one more.
Well, should we Are there any questions on fraud and bots right now for these guys?
Oh, we got one here in the middle. Oh.
Hey, Garrick from TheoremReach. So coming from the audience provider side of things, I mean, there's two types of bad quality situations that I'm hearing here, right? There's the fraud and manipulation side, and that can be easily achieved with industry-wide adoption of something like server-to-server callbacks. But it can't, if there's one break in the chain, then it's very easy for a sophisticated hacker to figure that out. The other side of the fence, of course, is, you know, data quality. So a lot of the incentivized and river approach guys, of which, you know, we are one, we'll always ask ourselves, how do we fix people from straight lining or just going through a survey as fast as possible to reach the carrot at the end of the stick? So there's a lot of ways to achieve that. I'm not going to pretend to say we have all the solutions because I don't think anybody does, but previous to this company, you know, I came from the advertising space and I quickly saw the race to the bottom that took place there, and just the reason why there's 25 to 50% bot fraud that's very well documented and known is because companies just let it happen. Everybody, from the clients to the middlemen to the publishers, who were more than happy to look the other way because of pricing models like CPC or CPM, where it's way too easy to just allow for the eyeball to consider what the, you know, price point should be. So there's a few ways to potentially combat that. There's never going to be an actual solution that figures everything out, but a hybrid model like a CPI with a CPC, for example, where you reward on good quality data, but you also pay out for the panelists' time spent, is something that we've been seeing with great success. I'm very interested in this industry to help figure out and help understand how to fix and avoid things like bad data quality and manipulation, because I really don't want to see us turning into what the advertising space and ad tech and martech have unfortunately fallen into, where it's kind of like, how do you fix something so big? It's like a problem that has no easy solution without 50% bankruptcy or consolidation.
Thank you.
Sorry for the doom and gloom.
No, thank you. We got one over here.
It kind of goes along, best customer interpret. This kind of goes along with what he was saying, but I wonder, I don't know if this is kind of to all of you, but would you say that if we, you know, offered a higher CPI that we would have less fraud? Are people manipulating these links because they feel that their time is not being valued, that they're not being treated fairly? And if so, where's that sweet spot? Kind of like what Nancy was talking about, where we can leverage that and use that to our advantage.
I'm afraid it might kind of be the other way around. The higher the CPI, the more incentive there is to steal.
Yep.
A very good question.
There you go.
Well, okay.
I mean, I'm not going to argue with him. He's my boss, but
we're going to switch to one more topic, but I should mention that one of the things that has really struck me about fraud is there's two types that I've seen. One is the Chinese click farms and that kind of stuff. People just clicking through, you know, this is their job. They're making, let's say, 45 points, which is a lot of money when you live in another culture, you know, so it adds up. But one of the saddest things is we see like fraud from Venezuela. And these people are not doing it to, like, they're doing it because there's no jobs, and this is a way for them to get money. And we have actually seen people get upset because we throw them out, and they're like, but I answered all your questions. They went online, and they looked up the brands, and they're like, oh, but now I'm aware of them all. And that makes me sad, because that's not who we're trying to go after. They're trying to be good. They're just not in our target audience. So one more.
Let's get one more in.
One more. So when my dad went out and got a job, he said, I'm going to get a job, and it's going to be for life. I'm going to have my 30-year career, and it's all going to be one company. When I got out of university, I'm not going to tell you when that was, it was three jobs. 2 years at your first job, 5 years at your second, your third job was for the rest of your career. Now I see these kids come out, and they say things like, I'm going to take this job until I get bored, and then I'm going to take that job until I get bored, and then I'm going to do something else entirely. It's a gig economy. This is related to our first question. Are we, as an industry, retaining and recruiting correctly? And how do we think about that?
There's a lot of good stuff in there.
There's a lot of good stuff.
Yeah, there's a lot of good stuff. Just a quick, I guess, 2 thoughts. I think they're interconnected. Think about, so we're in California. Obviously, California doesn't have the concept of a non-compete, okay? Which, I don't know if I should mention those words here, but maybe it is a topic because I've heard it a number of times yesterday at the reception, people talking about non-competes and how it impacts them, their business, whatever it is, so maybe their thoughts about that. But I look at California and the model there. Obviously, there's no non-compete. And look at Silicon Valley, right? Is that a correlation, cause effect? So is it a bad thing? Is this allowing people to become more entrepreneurial, right? And open businesses? Is that bad? Maybe it shouldn't be. I know that we all have businesses to protect, but I don't know. Is that a bad thing? And I know maybe that's why we do have non-competes, because we don't want that to happen, but maybe, I don't know the answer, but these are just thoughts that go through my head when I think about this concept. I don't think it's just in jobs, though. I mean, you think about a house. Back in the day, you bought one house, you lived there for how many years? Today, you start a starter home, then an upgrade home, and then there's another home. So I don't know if it's just our generation or the fact that there's non-compete things. I don't know. Thoughts over here before we open it up?
Oh, I have a lot of thoughts about this topic. And I think most of us do. I would challenge anybody to consider how this has touched your career or the careers of people who report to you or the careers of your kids. I mean, this is the future that we're talking about. And it's an emotional topic for me because I've personally experienced it. But more importantly, we need to foster competition in our industry so that we remain healthy. And we have to do that in every way possible. We also need to respect that we need to have talent in this industry and we need to retain it. It takes a long time to learn how to do this work from a research perspective. How many thousands of surveys have I authored? Well, it took me a long time to get to a place where I know how to ask a question. And if I get forced out of the industry, we lose that mind share. And that's not just me, I mean, it's everybody, right? So it's a big topic right now because we have a lot of mergers in our space happening as well. And we have a lot of people who are losing jobs. And that's business, that's reality. But how do we keep those folks active in our industry? And even more importantly, attract and retain new talent. And money's coming into this industry. We just had this wonderful presentation here earlier today. How do we make them confident that we're going to continue to be smart about this work? Joe?
Yeah, I think that's an important factor. I think the market research is a smaller community, and keeping that knowledge share within it and not forcing people to go out of the industry, I think is the key topic. Trying to make sure that the people who have been on in this industry for so long, understanding the detailed knowledge that they present, pushing them out is not going to help anybody. That that internal discussions to keep them in the industry is going to be paramount.
You make a very good point. Organizations need to protect themselves.
Mm-hmm.
They work very hard to get that edge.
So what's the right balance?
Yeah.
How do we deal with it?
I think we have
5.
Okay.
We got 5 minutes.
All right.
Okay, good.
I'll be quick. Adam from EMI. I think this can relate to 2 other topics that we talked about earlier, and that really comes down to really bad business decisions that we as like an industry have made. So if you think about mobile, we talked about where are we so far in mobile. You could say that we wasted a year or 2 by making a bad business decision that we all had to set up these mobile-first app-based panels. We weren't worried about where people took it, just that they took it with us. Then you could talk about API and programmatic. The problems that we have there, you hear like some commoditization. Well, we kind of flooded the market with tools to be first to market, to have the first program, the first DIY tool, the first automation. We created that ourselves. And now we talk about this non-compete type thing. It's that same stubborn old business decision, like what is the most capitalistic thing that we can do right now? Not that that's a bad thing, please. But, you know, like it's the same type of mentality that we had. It's a very narcissistic way of doing business that has led us, so far we've messed up twice. And this is like very easily number 3. If we become in an industry where like our number 1 tool is knowledge and that's our number 1 trade, to start limiting on who gets that knowledge, when they can use that knowledge, and where they can, those type of things.
All right. Let's get another one. Lisa up front. JD, you're next.
Amen to that. Whew, I wanted to give you a big applause there. I totally agree with you. The other thing that's kind of crazy for me is what I've noticed the last few years is that non-competes aren't just isolated to salespeople, like big book guys and gals that are carrying like large books of business. They're having these young kids out of college who are entry-level project managers and account executives signing on the dotted line, and there's non-compete language in there, and they don't even know any better. And I think the other piece is that it's one thing when you leave on your own volition, but through these mergers and acquisitions, you lose your job, and then you can't go get a new job in the industry that you know. It's just pushing it way too far, in my opinion.
Amen to that.
Uh-oh. What do we got coming up here? JD. Oh, yeah.
There are a couple of places where I just sort of listened to the conversation, and having been both on the very large company buyer side with my former colleague wearing a lovely hat up there on the stage, to sort of the newer tech side. I mean, I might see it in a slightly different way. I mean, and I've actually suffered from non-compete issues and things like that. I think fundamentally our business is changing in ways that we're not even fully appreciating at this point in time. I mean, Adam's point, which I completely agree with, is a scenario where an existing business is being forced to go through very rapid change and try to do so in a way that helps it preserve its revenue. That's fundamentally the issue that many of these businesses have faced, right? I mean, it's that this change has happened. In order to compete with it, they have to develop all these new technologies, leverage knowledge in entirely different ways, while they're still trying to preserve revenue and keep people employed. That, to me, suggests a lot of different things about how knowledge workers especially become used in a company. There's plenty of very smart people in this room who have a lot of research experience. We're not necessarily going to be writing questionnaires in the future. What we're going to be doing is helping programmers create tools that embed that knowledge so that you don't need one person to write 5 questionnaires. That one person will be able to help program a system that can do 5,000 questionnaires, right? So, I mean, I think we all need to be extremely skeptical, aware, a lot of different adjectives you can use about managing our own careers in this phase where we're very conscious of the way that the demand for our knowledge is going to change, and we're going to have to make ourselves more skilled to be able to participate in this and to make sure that we're preserving our jobs. Because if we just continue to look at the research industry and be nostalgic about the way it used to be, then it's a losing strategy, right? And we all have decisions to make. I mean, I'm not a big fan of non-competes and things like that, but we all have decisions to make about who we think we want to work for. I mean, it is, there's an aspect of the gig economy that's very empowering in certain ways, which is that people who have a lot of these types of skills can make choices that, you know, where it's sort of like it's a buyer's market in some respects, or seller's market, I think.
Thank you. So we got one more, and then we'll close out. More back here. JD, that was calm. I was expecting more.
Hi there. Carl
Saving
from...
it for the Shark Tank.
Okay, it's coming later.
It's Carl from Zapistore. The gig economy comment is interesting to me because I think I've probably come up through 5 or 6 years, admittedly not many of them in MR, where I've moved around quite a bit, and that's been important for me, developing different skills, getting exposed to different technologies and so on. I think as a business, and I can speak from our perspective, if you become too restrictive with non-competes and so on, that kind of environment is not going to appeal to the kinds of people you need to employ. We heard earlier about how it really inspired me, the comment about how we're in an extremely competitive marketplace now, where we're not just competing with traditional market research firms, we're competing with all types of data collection. If you want to innovate with that, you need, I'm thinking specifically about programmers and developers here, because that's what I do, but you need people who are free thinkers, you need people who have probably moved around a fair bit. They might not stay in our industry for very long, but they're very talented at problem solving. You need to create an environment within which they feel comfortable to come and work for you, but then again, have a recruitment pipeline that's good enough to fill the places that you lose when people move on, because it's inevitable, I think.
All right, so we're just about done. You know, just a closing thought on this, not on this, but on SampleCon really. You know, like we mentioned before, a lot of time, effort, preparing, and stress goes into an event. I personally, in addition to this, just got back from, I guess, traveling the world, and just a lot of stress. Just got back 2 days ago. Just didn't know what to expect. But as soon as I got here to Austin, to SampleCon, I had this feeling of like, welcome home, like welcome back to the family. Like I'm here, this is really a family. For those that have been here for a few years, I think know that. People keep coming back. And for those that are here for their first year or their second year and didn't feel it, welcome to the family. Keep coming, you know, all questions are welcome. Share your opinion, get to know every single person in the room. And I think this extended panel and session is just a testament to SampleCon and sharing your voice. It's one panel. I know a few of us are up here kickstarting it, but it's all of you in the audience, so thank you.
Thank you, everyone. Thank you.
Jacqueline?
Here's your hat back.
On this thing, I probably don't even need it. Hello? Hi. So now it's time for our break. We've got 15 minutes. While you're breaking, don't forget, if you have an appointment to have your headshot taken, please show up for that. I think there's only one spot left. It's a hot commodity. And then after the break, we're going to change things up a little bit so that we're not all sitting in the same place. We're going to break out into 4 collaboration labs. You get to pick which one you want to go to. Lab 1, future of feedback, new ways of responding to surveys. Lab 2 is dealing with and limiting B2B sample fraud. Lab 3 is GDPR, and Lab 4 is changes in measurement approach and methodology as it relates to passive and behavioral and single source and blended. So on your app, it'll tell you what room. One group will be in here, and then the other 3 groups will be in the different rooms, but look at your app and it'll tell you where you need to be at what time. Enjoy your snack, and then you can eat again in 45 minutes. Eating is important.